Hello, trading world. This is my pre-market outlook for March 2nd, 2021. Um, a little recap from where we just came from the last 2 days. On Friday, um, I started talking about the makings of a dead cat bounce that might have claws. And today we got a heck of a bounce. And that's exactly what I mean by a dead cat bounce. I put on a few calls at the 387 strike. I've gotten off all all but two of them, and they are still running. Even though I should have taken at least one more off. When we hit the highs today around 390, because that's the exact target that I was looking for. But I stepped away from the computer for a while. So with that being said, here comes the part about the clause. The clause is just seeing if it has enough clause to kind of dig in and stick for a while. We were on our way to starting a nice little correction, or the beginning parts of a correction, and we got interrupted. Now, let's see if this bounce can spark something. And things that kind of pay attention to, and what I'm basing my probabilities off of whether we continue up or reverse down. Looking at this hourly chart, as you can see here, we have a lot of support around this 386 area. A lot of support here. We also have a lot of resistance above us at this 390, 391 area. Well, you can say between 390 and 392 basically. There's a lot of resistance. So it's possible we can kind of ping pong this area for a bit. But don't get too comfortable with the ideal of ping-ponging through this area for a long period of time, because I don't see us being here a long period of time. Now, certain things to kind of pay attention to. I've been saying that big tech, which I look at as QQQ, and financials, which I look at as XLF, they have been playing pretty much tug of war with the market. Wherever those two go, it's going to take the rest of the market with it. So, as we continue, QQQ has actually bounced, and XLF has actually bounced. So tomorrow I'll be looking to pay attention to them to see whether they continue to bounce, or whether one kind of flakes off or one continues going. Clues into the financials. The bonds are going to play a big deal with the financials. I used to pay a lot of attention to the bonds. That was one of the internals that I basically paid attention to, or I used as an internal to kind of pay attention and get some insight on the market. But ever since this corona thing and the Feds stepping in and buying bonds, it's just been almost impossible to get any type of hint or gain any ground on how it would treat the rest of the market opposed to the bonds and their reactions. But here in the last few days, it seems like the bonds are waking back up. So I'm not completely sure how much we can count on it. Being that I've only started paying attention to them again in the last couple of days, but the volume has started to pick back up. So I would definitely pay attention to the bonds because the bonds also rallied today, but in the after hours market, they've pretty much given up a good bit of that rally that they had. And if the bonds continue to give up ground, the financials aren't going to like that very much. And it's going to cause the financials to go through a lot of volatility. Now, it is very rare that we have two back-to-back steamroller days, which I call, or what you call uptrend steamroller days like this. It is very rare to have those days back-to-back. However, it can happen, and I have seen it happen. So odds on us continuing this explosive move is very low. So that's why I'm looking for us to kind of consolidate a bit between this 390, we'll say between this 386 area and 392 area. We'll consolidate there. But another thing to be very, very careful about is that there's what I call a air pocket below 386. If we somehow pierce that support and fall below 86, there's an air pocket that could whisk us very fast all the way back down to 379. So that is something to be very, very careful of. As a matter of fact, the roll from 390 to 379 can happen a lot faster than the road to 392, or we'll say 391 to 394. It's less distance, but a much harder road to travel. So my probabilities would be, the bigger probability would be there's a 60 to 70% chance that we reject at the 390, 392 area and take a ride back down and continue on with heading towards a correction. However, everyone from beginner to professional can see the resistance that's building up at 392. And when it's that widely seen, it makes it a broad case or easy case for a short squeeze, where everyone's piled into a trade one way, and another word that I've heard, or another way to put it, is the pain trade. The pain trade would be for us to continue higher. So you definitely have to keep your eyes on that. Be prepared. Know your risk. I usually tackle trades like this as I do most trades, especially right now with volatility the way it is. I don't really do much of anything without brackets or a stop loss and target. So tomorrow I'll be waiting to see how the internals shape up, to see if we can muster enough strength to give at least 2 or 3 tries at the 392 area. It'll also give me a chance to get out that last 387 call, and I'll also be looking to try to flip short. However, it may happen kind of fast, so I may put in an order before market to try to get in at that, just above that 390 area, and I'll try to put the position in the room at the time I execute it, but it'll probably have at least 10 days of time, and it'll probably be above 70 delta. So those are 2 key things that I'm going to be looking for once I enter that position tomorrow. There's one other thing that I would like to point out. Looking back at the daily chart, we're getting closer and closer to the bottom end of this channel. We came in contact with it here and got close here and closer here, and it just looks like we're just getting closer and closer to breaking through the bottom of this channel. And once we break this channel, that to me is the thing that definitely tells me we're on the way to that correction. So that is where we are. There's a lot of things, a lot of headwinds we're facing right now. And technically, most of the things that I look at says that we want to go down. We want to enter into a downtrend. But the only thing that I can see or kind of rationalize as to why we're still holding on is the hope of this $1.9 trillion stimulus package that seems to be flooding liquidity throughout the markets. So, looking at that, everything is definitely telling me, or technically sending me signals, that we want to go down. So I have to be very careful to look for confluence in every trade that I take right now. And what I mean by confluence is I'm definitely hunting a divergence. In order for me to take this, take another short, no matter what indicator you use, one of the main ways to use it is to look for divergence and convergence. And a brief example of divergence, and one of the main ones that I like to find, is that with price making a new high, you would get a lower high on the indicator, which means the two are diverging. So that is going to be one of the main things that I'm looking for in my confluence between price, internals, and the indicators. So that's it. That's my outlook for March 2nd, 2021. As always, know your risk, and wishing you profitable trading days.